this morning, Jeff, you
Yeah.
were saying inflation is just accepted. It's never questioned.
Oh boy.
Debasement is never discussed.
Yeah.
What is debasement? What is going on?
Yeah, I'll give a little bit of perspective. So yeah, we met up earlier. We're here in New York City. I had a few conversations, just thinking about the insurance industry and how the insurance industry kind of views inflation. In every single conversation we have in insurance and reinsurance, the concept of inflation comes up, and it comes up really often. And it's interesting. It's the narrative from the insurance market and the reinsurance market. Inflation is just accepted as this concept that just exists, right? Just like taxes, right? Like you can't get away from taxes. You can't get away from inflation. It's a very interesting concept because many people aren't questioning or asking about why is there inflation, or what is going on that is causing inflation? Why does inflation change? And I think that was one of the real big reasons that I started looking into it and thinking about Bitcoin, was seeing a changing inflationary environment. So it's just an interesting concept in thinking many people that work in the current capital world and the capital system don't know that there's necessarily a problem yet. And I think it'll take a little bit of time before people really open their eyes and start to learn and do a bit of research about understanding about the design and the structure of these financial markets and these things. It's interesting.
Yeah, and I think the debasement piece there is really interesting because there's a total lack of understanding with things like inflation and the CPI. And I'm not talking about farmers in the middle of the country. I'm talking about professional finance people who either interpret the CPI as being inflation or they've just never run the numbers. I think it's from 1950 till now, so about 70 something years. M2 money supply in the US is CAGR'd at 7% a year. Sometimes more, sometimes less, but then when you've got the Federal Reserve also artificially manipulating interest rates, it's like those two things are the reason for wealth inequality. But there's just a total lack of understanding of what you were saying, Jeff, the root cause of the problem, kind of why it happens, and then how do we position ourselves advantageously knowing the full scope of information.
Yeah, and the reason I care a lot about this is that, thinking about where the insurance market goes. If everyone's expectations of inflation increase rapidly, any long tail insurance line that makes an assumption on inflation, like workers' comp or casualty or life insurance, if you are not appropriately positioned against inflation and debasement, that entire market is eviscerated. And I think there's this misconception where inflation is this umbrella that captures everything going on with the changing monetary system. And there's two components to that, right? You have this CPI, this core CPI inflation where goods are more expensive, but then you have this debasement component. I think a majority of the industry itself is coupling debasement inside the inflation umbrella, so much so that the industry itself has created this new term called social inflation, where you have these jury verdicts that are beyond inflation expectations. And the reason that's happening is because society knows that there's more dollars in the system, and these verdicts should be larger. And that delta that they've created this new term for would be captured if debasement was a factor in understanding the delta between CPI and the monetary supply. So,
and then if I can, what Jeff just laid out was from the insurance reinsurance perspective. I'll just do two more points on this from let's call it the traditional investor perspective, stocks, bonds, real estate, that sort of thing. The volatility of the CPI, and this is another thing I learned from Christopher Cole, the volatility of the CPI is the highest correlated derivative metric to interest rates. So if we roll the clocks back just 2 years, which by the way, I think was our .com bubble, growth stocks getting crushed by 70 or 80%. But the reason that happened is because interest rates shot up from 0 to 500 basis points. So the CPI itself, but also the volatility of the CPI matters tremendously for, let's call it, traditional investors. And as it pertains to interest rates, the kind of the last interesting point I can have on this stuff is that there is an abundance of manipulation with the CPI. And this is not a recent phenomena. I shared a Twitter post 6-8 months ago, something like that, showing from 1940 to just like it was 1942 to like 1944. So it was just a 2-year window. And there was like 20 to 25 changes, like intentional arbitrary changes in order to produce a lower CPI. Right. And that happens in the present day. And Michael Saylor, maybe you've heard of him, he talked about this in great detail on the Lex Friedman podcast, where he was like, let's say perhaps traditional concerts used to be in the CPI, but now because of the mobile wave, because of Netflix, you get 10 Netflix concerts. So the user experience goes up because the cost of like producing a Netflix concert is close to zero relative to a real concert. But you just keep weakening the basket. They got like super core where it takes out all the things that go up, like, energy, food, that sort of stuff. So this is where it gets tricky for investors. It's like, we know there's inflation. There's always going to be inflation, right? But is it going to manifest in the CPI or not? And that's a much more difficult thing to ponder about.
What did your cab driver say to you this morning?
My cab driver. Oh yeah, this is yes, the dollar's getting weaker. In his New York accent, he's like, $1 today isn't worth the same as $1 yesterday. And he had his finger on the pulse, and we're seeing it all over the place, and it's infiltrating everywhere. Yeah, the taxi drivers know. They're aware. They're plugged in.
Well, you said he's in his car and he's scrolling Twitter.
Yeah. Oh, yeah,
So he's probably more in the know than some percentage of the finance people in New York.
Oh, right. Yeah, we're talking about. Yeah, I mean, he was actually very well read, and he had a very good understanding. I mean, I think he even brought up the Federal Reserve. Wow. The fact that you have people that are sitting in these high rises working in downtown New York, they don't even know that the Federal Reserve is a privately held bank.
Right. And they make a fortune in the ivory tower.
Yeah. So now you have this huge information asymmetry where there could be a massive change in global wealth distribution very quickly in financial markets. For those that aren't paying attention and aren't challenging or questioning the existing infrastructure of the system and how things interact.
Hey guys, today's episode is brought to you by Stampseed. I would just recommend that you go right to stampseed.com and check it out for yourself. I've held it in my hand. It's a titanium seed phrase storage device. This thing is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount on the entire website. That's TIM15. We were talking about this a little bit this morning. Yeah. How important do you guys think it is to have actual time and mental space to learn and think critically and reflect? I mean, just to be able to take information in, which I don't think most people can do in their busy lives.
I would push back on that if I may. I think the learning is the main thing, right? Forget all these meetings or useless PowerPoints that get made in the corporate space. The real blocking and tackling, we got a football player, the real blocking and tackling of any professional operation, or scratch that, any operation at all. Doesn't matter if you're putting roofs on people's houses or you're farming. The whole, the main operation is learning. How can we get better? How can we get better? So I think we tend to get too bogged down with the things that don't matter, and we lose sight of that's like Charlie Munger 101. The secret is just keep learning,
I couldn't have said it any better than that. It's if you're not learning, you're falling behind.
Right.
And especially in a digital economy, in a digital world where you have these new asset classes, they take time.
Right.
Yeah, you have to spend hundreds and thousands of hours to understand the possibility with this technology. I mean, Bitcoin itself, crypto, the whole world of crypto, people got a bad taste in their mouths when FTX collapsed.
Oh, sure.
Because it was in the news. Everybody knew about it. Tom Brady was tied up in it. Everybody looked really bad, right? Mm-hmm. Everybody looked really bad. But that had nothing to do with Bitcoin.
Right.
That had nothing to do with Bitcoin. That was a bad actor running a shoddy bank.
But it all gets grouped together.
So, that could have been an opportunity for many people of asking, hey, why did this happen? As opposed to just saying, oh, that's crypto. It's crazy. It's wild, wild west. And it's like, well, it's wild, wild west because it's an infant in geological time. Right. Many people think about these monetary currencies. Right. Bitcoin's been around since 2009. It feels like a long time because it's like your life time horizon. But on geological time, right? Like all of the data that we know of Bitcoin today is going to be a blip 100 years from now.
Right.
And it's an interesting concept to think about where the world is 10 years from now, 20 years from now, with that as a, background.
It's a drop in the bucket.
Should we talk about MicroStrategy? MicroStrategy, we got a 68.
I've never heard of that company.
Maybe you've heard of it.
Imagine if we talked about MicroStrategy for a little bit.
The inflation stuff was just small talk.
Yeah, that's just warming up.
Now let's go to meat and potatoes.
Yeah, we got a $68 billion market cap as of today, 155th largest U.S. publicly traded company. Bitcoin is at $89,362. Both are in all-time high territory, both in price discovery, and I think everybody's really trying to figure out what both of these assets are worth. So it's a fun time to be talking about digital capital. It's a fun time to be telling stories, running around New York. I was just in Minneapolis. I went to a Bitcoin meetup in Minneapolis. I encourage everybody to go to their local Bitcoin meetup. Start talking with people, telling stories. You start to feel a lot less crazy when you start talking to people that are thinking in the same way that you are. And the community is incredibly welcoming, and there are some really inspiring stories out there from a lot of people. Yeah. And a lot of people are working to make Bitcoin and digital capital a much more viable product for the future. So it's a really, really exciting time to be thinking about these topics.
And just to add one thing on that, people say this on Twitter all the time about like how inspiring and just awesome it is to like go to these events, meet people in person, share ideas. And I just want to, pound the table.
You got a table to pound.
I've only been to two such events, but those two events were the coolest things I've ever done in my professional career. As far as like events or conferences, like it was the coolest. It was MicroStrategy World this year, and then Bitcoin First just several weeks ago or a month ago or something. But I could go on and fill the rest of the time here. So I just want to pound the table that it's really inspiring. It's really cool to share ideas with people who are just way smarter than you.
Well, you got to think about how deals get done, right? You talk to people.
Right.
Yeah, like deals get done by talking to people. And if you're not out talking to people, then the deals aren't going to get done. Right? You're not going to just make some sort of product digitally without ever meeting somebody. There's still some level of trust in the system. You're working with humans. I think that will always be the case.
It has to be. Yeah. There has to be that discretion, that like final authority for like yes or no, close the deal, don't close the deal.
Yeah.
ChatGPT can't do this stuff.
ChatGPT is not running your deal for you.
No.
I thought you were just going to have AI agents doing deals with AI agents.
Well,
yeah. That could be the
Who
future.
knows?
Speaking of deals, you want to talk about the 21-21 plan and Saylor's comments yesterday on CNBC that, deploying that capital in less than 3 years, depending on market conditions, may be a reality. I mean, he's already deployed over $1 billion of it the first 10 days of that $21 billion at the market.
Yeah, so the way I'm interpreting this is truly like all your models are destroyed because there's such an insatiable demand. I don't know if I used that word correctly, but let's move on. There is such an overwhelming demand for the shares, for the convertible bonds, and then on the shareholder side, like show me one time in American, like US equity market history where the shareholders actively cheered on three things: volatility, dilution,
Accretion.
Oh yeah, I gotta volatility, accretion. Well, it's
I hear you.
There's
Dilution.
like words that can be taken out of context,
Dilution.
but I think I said dilution there on purpose because MicroStrategy has just flipped the equity model on its head. Yeah. Saylor talked about this at length with the interview he did in Brazil.
Yeah.
Where he just said, we're a balance sheet business, not a P&L operation. And every other equity is like a P&L operation who wants to get rid of their cash, either through buybacks or dividends or like buying treasuries or like whatever. They want to reduce the volatility on the balance sheet. MicroStrategy wants the volatility on the balance sheet because volatility is the product, right? The stock is the product. The convertible bonds are the product. And the options market is the product. And MicroStrategy is delivering the winning horse in all three of those categories. And I don't think much of TradFi has really understood the magnitude of what's going on here. And look, I would say that the incentive structures are such that they're going to be pedal to the metal on this stuff, and perhaps expanding that 21 billion on the ATM side quite considerably, because Saylor's also kind of being a lead proponent of like the Bitcoin strategic reserve. He had that Trump Max slide that I saw before we got here where it's like the US having 6 million Bitcoin. So to the original question and to wrap here, there's just such an overwhelming demand for these types of products, and I just only see that continuing to grow. So, I mean, we could speculate on like how many in dollar terms, how many shares are we going to sell over the next 3 years? But I would bet that it's going to be more than the 21 billion on the current ATM plan.
So I'm going to speculate a little bit.
Let's do it.
because the math is really interesting. So. Right. The ATM that was filed in August was $2 billion. MicroStrategy used 1.1 billion of it, and they announced that they bought X number of Bitcoin. That brought them up to 252,000. Now, then they had the earnings call where they announced the $42 billion plan, 21 billion, and that included the filing. So like basically they filed for the 21 billion at that time. 10 days later, after the earnings call, Saylor announced they bought, 27,000 more Bitcoin, it was larger than the next closest publicly traded company's entire hodl of Bitcoin, Marathon's Bitcoin holdings. So that $2 billion, of that $2 billion, 900 million of it was from the previous ATM offering.
Oh, wow.
And 1.1 billion was from the $21 billion offering that they just filed. They sold $2 billion of shares in 10 days, and the price of the stock went up.
Right.
The price of the stock went up. So they sold $2 billion of shares, and the price of the stock went up.
And that shows the overwhelming demand.
Huge demand.
For owning the stock.
Incredible demand. Meanwhile, it's probably, he's buying Bitcoin on the back end, and the price of Bitcoin is running up because there's very little Bitcoin trading at the margin.
Right.
So now if you think about just the relativities here. So I think average trading volume for MicroStrategy's daily trading volume now is like $20 billion. It's huge.
It's in the top 5.
It's huge
with Mag 7.
It's huge. It's trading. Yeah, it's trading up there with the top publicly traded equities. Mag 7. I think it's even higher. It's probably top 5, top 4, top 3.
Yeah.
And so if you think about $20 billion of trading volume, even if they captured 1% of that daily, they could sell $200 million of shares. $200 million of shares per day. So you're talking $1 billion of shares, $1 billion in a week. There's 8 weeks left in the rest of the year. You're talking $8 billion, right? There's a very high likelihood that MicroStrategy could buy another 100,000 Bitcoin before the year's over.
Do you think that's what Saylor was talking about?
Absolutely. Absolutely. Because let's just say it's, and this has got a reflexive nature in itself, right? Because as the price goes up, if the multiple expands, that trading volume, even if the trading volume of shares, if it remains constant, the dollars is actually significantly larger. So I think there's there's potential that they're halfway through, or maybe even complete potentially, with the ATM offering by the end of the year. And we see a massive announcement with significantly more Bitcoin put on their balance sheet. Now, the most fun part about this whole thing is the game theory, right? Like, if new political administration, right, red wave. If you are dead serious and you think that the United States government is going to buy Bitcoin and put it on their balance sheet, everybody has incentive to front run them. Me as a shareholder, I want MicroStrategy to front run them. I want them to buy Bitcoin before the U.S. government does, because I don't want MicroStrategy to be buying Bitcoin when the price is at 600,000. If they could buy 4x the amount before the U.S. government has the buy button, right? Like, they don't even have the buy button yet, but maybe they do in February or March. And the nation state adoption potential here is also incredibly appealing. There are other countries that are seeing this signal from the U.S. government and start to think about, okay, well, if the U.S. government's going to do that, I effectively have headroom to and buy side volume if I ever wanted to exit the trade. Even if you just wanted to take a speculative position and buy and then sell to the U.S. government, right? Like, they're going to be willing to pay more than what you paid up front for it. So, I mean, there are so many players in this game, and the math is, I think the word that you said hits it on the head. I don't think people really truly appreciate or understand the magnitude here. $21 billion is the largest ATM offering in publicly traded company history. And the fact that they were able to sell $2 billion in 10 days, like, that should sound alarm bells for people on the positive side, right? Like, that's accretive. That's accretive to all shareholders. So I think people should consider the probability that 50% of the ATM or potentially even more is done before the end of the year. Think about who the largest shareholder is. It's Michael Saylor.
And no one talks about that ever.
He's the largest shareholder. So, like, I'm telling him, please buy more tap the ATM, please buy more Bitcoin, do it fast. And he knows that. I mean, that's the demand he's seeing with people buying the stock. Everybody's aware of it.
Yeah, and I mean, for me, just to build off that, and then I want to go back to volume for a couple quick points, but I know, like, we've got the Bitcoin yield KPI, and like Bitcoin per share is obviously like a very important variable. I mean, like, that's obvious. For me, I don't care about either of them. The thing, and this is just my opinion, I'm not like forcing this on other people.
Oh, this is not financial advice.
This is not financial advice.
Well, everything said here is interesting and great. This is not financial advice.
Well, I'm kind of directing this to MicroStrategy, in terms of like how they run the operation. The thing I care most about is how many Bitcoin can we end up having on the balance sheet, right? And I won't even get into the buyback stuff, because that is like literally the longest term, like the furthest away catalyst that we have. But if Bitcoin becomes much less liquid and available on exchanges, we can just start buying back the stock. And then not only does Bitcoin per share go up for everyone, but everyone's percentage ownership of the company also goes up. We can worry about that 10, 15 years from now. But right now, like the name of the game is like, we already front ran Wall Street. We're front running QE5 or QE6, whatever one it is now. And we're also front running nation states. So just focus on the buying and we'll figure out all that other stuff on the back end. Couple quick points on volume. Jeff talked about the $20 billion like average daily liquidity, which sounds about right. I haven't run the numbers on that too recently. And there's many reasons as to why that's important. The first one is, imagine the stock for whatever reason was like illiquid. Like think something like Semler Scientific or just like a smaller operation with like much less fanfare and like shareholder enthusiasm. It would be incredibly painful to add selling pressure into that. But the more volume that MicroStrategy has, the easier it becomes for them to, and I'm of the belief that they're probably selling shares every day, if not 3 or 4 days out of a 5-day trading week. So you can really just like hide. Like those, you can sell and it just gets lost in this like constant trading activity and doesn't like affect the price too much. The other reason I think volume is big is because volume on all things, whether it be like the S&P 500 or like really any asset, there's typically always a pretty strong positive correlation between volatility and volume. And then you also layer in that like price is now correlated with this. And then like, and liquidity is of course, well, that's kind of just a derivative of volume, but you've got these like core fundamental financial metrics that are all correlated to each other. And we were talking about this earlier, and there is this extremely unique scenario with Bitcoin type, whether it's Bitcoin itself or like Bitcoin type equities, where as the underlying stock is going up, the implied volatility is also going up. This is incredibly unique. It's unlike anything I've ever seen before. And when Jeff Park posted about this like 1 or 2 months ago in that negative Vanna Gamma paper, it just really blew my mind. So then I went on, my computer with my like implied vol metrics, and the first thing I do, I look at Tesla and Nvidia for their long squeezes over the past several years, and without fault, both of them, as the underlying stock is going up, volatility is compressing, right? But with MicroStrategy, the underlying's going up, the volatility is also going up, which has, to my understanding, major ramifications in the options market, right?
Major.
Because an option is priced based on, the strike price, the percent distance between spot and the strike price, time, and volatility. Those are the 3 main inputs to price an option. And the higher the implied vol on that specific contract, the more valuable it's going to be. And what's more intuitive, or should I say obvious, is that as the underlying goes up, the contract's automatically worth more, because it's either like moving closer to in the money or it's moving deeper in the money. So you've got that kind of obvious impact. And now you layer in that as the underlying goes up, implied vol's also going up. So this is, I've never seen this before, so I can't even like accurately speculate on how that's going to affect prices in the options market. But to me, that's the coolest thing about the options trade. As the stock goes up, IV goes up.
Well, it kind of gets to this concept a little bit of just thinking about Bitcoin being a Veblen good.
Right.
Right. As it becomes more valuable, or as the price of Bitcoin rises, it becomes more interesting, more valuable to people, right? It's like a luxury goods or Veblen goods, right? Like if you think about Rolls Royce or Bentley, like
Rolex.
Rolex. The price is really high, but that makes the demand for it really high.
Right.
And it's very similar to Bitcoin. I think we're going to see, once the price hits 100,000 and 400,000, two waves of new buyers are going to come in the door, because it becomes a it's a different type of product. It's now the second largest asset on the planet, right behind gold, or larger and more efficient than holding a piece of real estate that's worth $400,000. So that's probably some of that concept there, where it becomes more valuable as the price increases to more people.
More desirable.
And the concept you brought up there, in thinking about other equities like Tesla, when the price of Tesla or any other equity goes up, the reason the volatility gets compressed is because there's more value in buying insurance to the downside.
Right.
Because the product is priced in, there's opportunity costs of these products, and it's priced in fiat.
Right.
Its underlying prices in fiat. Now, with MicroStrategy, having Bitcoin as the treasury value, and it having this volatility correlation to the upside, where as the price goes up, it gets more volatile.
Right.
And that's what's underlying the entire trade of MicroStrategy. So as the price of MicroStrategy goes up, it becomes even more volatile than that.
Right.
And I think you pointed out the volatility of MicroStrategy itself is greater than the VIX, the volatility index.
Big point.
Which is crazy. Yeah. And monetizing that volatility, we're in early days, right? We're going to see future products that are going to continue to monetize the volatility of these products.
And just to put a number on that, and then I'm happy to go to next question. I haven't looked in a couple days, but the implied volatility on MicroStrategies in the ballpark of 150%. The implied volatility of the VIX, which is a volatility instrument, is about 100%. So, I mean, it's just, again, we go back to this idea, the volatility is the product, and it's working. Like magically working.
Yeah. So you have right now personalities like Novogratz on CNBC saying it's a long shot to have a Bitcoin strategic reserve here in the United States. Then you have Michael Saylor at a Cantor event saying this is manifest destiny for the United States. And then yesterday you have my home state, Pennsylvania, introducing legislation that they're going to put 10% of some fund that's $7 or $8 billion into Bitcoin on a state level. So in my mind, I'm like, well, there's no way that this new red wave administration is going to let states do it, but not do it on a national level. And so whatever those numbers are, 700, 800 million for Pennsylvania, however you want to do the math, times 50 states, and then the federal, and then 150 some countries. How do you even think through that from a game theory standpoint?
The scale is deafening. I mean, the scale that where this thing could go, it could happen relatively quickly, I think, where this continued game theory continues to play out. But the interesting element here is time. And there's information asymmetry, and a lot of people need to learn what's going on. So time is the most interesting element in that equation, I think.
Yeah, and I would say, this might sound crazy, but I would say that the announcements are almost more important than the actual act of buying. And this all goes back to Punter Jeff's school of game theory, but when that stuff gets out, whether it's Pennsylvania, whether it's, Saylor pitching Trump on, why there should be a strategic Bitcoin reserve, when you've got Bobby Kennedy at Bitcoin Nashville saying we want to buy 4 or 5 million Bitcoin, not dollars,
the number,
real coins. When you've got Senator Cynthia Lummis, in all caps on her official account saying we're doing a Bitcoin strategic reserve. I mean, then you've got MicroStrategy talking about, the largest ATM ever, all that sort of stuff. I think so. We know that those announcements are out there. The world listens. All of the other public companies listen. The Semlers, the Genius is a brand new one. The Metaplanets. I think the last like speculative piece here is, will Howard Lutnick be the Treasury Secretary? I think that's like the final like seal of approval. I mean, you guys heard what he said on Pompliano's podcast. You know, I have hundreds of millions of dollars of Bitcoin and I think it's going to billions. So he's as bold up as can be. And then you've got the rest of that infrastructure around him, Bobby Kennedy, you know, Senator Cynthia Loomis, all these other characters. So I think I think the importance of the announcements themselves cannot be overlooked. You know?
Yeah, absolutely. And these folks that can be in these positions are incentivized to increase the infrastructure of a Bitcoin economy too. So I think Cantor's interested in, you know, lending solutions, right? And I've been talking about this in on X. Bitcoin itself is a technology.
Right.
If there becomes an innovation in the technology or the infrastructure of the technology, the value of the underlying Bitcoin itself, the market can determine that the value is significantly greater than what it is today. And it could skip significant price points.
Oh, sure.
For example, if there's a lending product where you can have a mortgage type product where you can buy a house by collateralizing your Bitcoin, and if the value of your Bitcoin goes up, you can use that to pay off your mortgage, or, you know, whatever the infrastructure may be. All of a sudden, you don't have to sell any Bitcoin to realize value. And those products are on the horizon. People are working on those products, and and I think many people are speculating on that. And so, yeah, I mean, I'm really, really bullish about the future here with digital collateral and digital capital. A lot of this stuff can remove the trust necessary in the existing financial system, or most of the existing financial system is very trust-based. There's some sort of trust involved in the system, whereas this can be done with code digitally with digital collateral. Yeah, it's incredibly interesting.
And to go back to the political piece a little bit, not that this is like my favorite topic, but I think there is an interesting point here in the political dynamic of like fundraising and getting fundraising from Bitcoin or like the crypto folks too. There's this thought concept, or there's this idea that's been created by I think Nassim Taleb was the one who originally started talking about it in his books, where if you have an immovable minority of people, it can be 1% of the population, 2% or 3% of the population. Given enough time, they'll flip the population or flip the circumstances into their favor, because the overwhelming majority doesn't care, right? Like us as Bitcoiners, as MicroStrategy people, like we care a lot. The people who don't invest at all don't even know what this stuff is. They don't care. And I think the political class recognizes this. I was even talking about this with Grant Cardone on a space before he met with Saylor. And I was like, hey, here's an idea. Take the Cardone operating company public. Keep doing your stuff with like the real estate side, and then let's like run the MicroStrategy playbook. And here was the angle I was really going on, was the immovable minority concept. Like, you will have hardcore Bitcoiners who will now be your customers, especially because his views are such that like he doesn't trust the banks, doesn't trust the Fed. So like his core values are so in line with Bitcoiners. So it's like, and then you get the network effect too, right? Where like if you stay at a Cardone place and you love the experience, you're going to tell me about it.
Yeah.
So I think that immovable minority concept in the political dynamic, as far as being like a major source of fundraising, I think we're at the beginning of a trend where more and more and more politicians are going to be warming up to Bitcoin because it's in their incentive structure.
Yeah.
I think the Elizabeth Warren like anti-crypto army, I think that's going to fade to zero over time.
And you've got all these folks that may have heavy Bitcoin or MicroStrategy positions where, you know, if the price goes up another 50%, all of a sudden they're exiting their current roles, working, doing something that they don't like.
Right.
They're going to say they're going to retire. They're going to retire for 6 months and then get bored and want to start building something that they care about, something that's really interesting to them, or you know, doing something that they think benefits humanity. And I think that's an exciting future to be a part of. That's a really exciting future to be a part
Giving back.
Giving back. Yeah.
Very, very optimistic.
Yeah. And improving the infrastructure of a digital economy.
Yeah.
Yeah.
Thank you guys for your time today. I'll hand it over to Ryan first, and then Jeff for any closing thoughts and where people can find you online.
You can find me at RyQuant online. Closing thoughts. I wish we would have went to Jeff first.
We can do that.
I could go.
Okay.
Yeah. You could find me on Twitter X. My name is Punter Jeff. We have a community and a group called MSTR True North. It's at MSTR True North. We talk about MicroStrategy every week. The concept is very similar to like the All In podcast, where it's effectively an investment club where it's folks that have been interested in Bitcoin and the MicroStrategy trade for the last 12, 24, 36 months. And we talk about things that we care about and we find interesting and that people are talking about within the community. Recently, it's been the capital raises, the convertible debt. We really dive into these things and explore the nuances and the detail of what's going on to understand the trade. So please join those. We run those Mondays and Wednesdays, 7 p.m. Pacific, 10 p.m. Eastern. And we also, Ryan and I have a Quant Bros channel, which we talk about stocks and things that we find interesting. And there's a couple communities on X that are incredibly friendly and fun to be a part of. There's a group called Irresponsibly Long. It's a community on X, Twitter X. And then there's also a Discord called the MSTR Den. And then also shout out to the dozens of people that are working in the MicroStrategy communities and spaces, ADIQ, Mason, Lizard Wizard, Colt Ennell, the guys that are running all of these.
Strategy, Nadia, Colleen, the list goes on and on.
Yeah, I mean, there are
grain of salt, the list goes on.
Hundreds of people I wish I could shout out right now. But, please keep doing what you're doing. There are 15 different websites that have information on MicroStrategy, and you can start to dive into those and help build the community. So, yeah.
Well, I've got two closing comments. Number one, I fully reject the all out podcast as I call it. I get what you were saying, like formatting and stuff like that. But the distinction that I want to draw between them and us is they talk about every topic under the sun, right? They want to like attract like a broad audience that's easy to pull people and like all that stuff, where it's like there's something there for everyone. What I love so much about what we're doing and what we've always done from the beginning with Quant Bros, like sharing screens and stuff like that, it was all MicroStrategy and Bitcoin. That was it.
That was it, because there's no better opportunity cost.
We thought that was the most compelling, equity in the financial market. And it's like, let's go deep on this thing, both in portfolio allocation and also our research time. So I think that's like one of our specialties, is that we just go deep on the topic that we really care about. And we don't sell advertising or anything like that. We have no boss. We control our own destiny. I think there's a ton of like potential optionality here for what, the broader True North group can accomplish. Let me just peek the time. And then the last thing I'll say is for closing thoughts, I really couldn't imagine being more bullish than I am right now. Like I've said this a few times, but if I had like a blank canvas and I could write out or draw the catalysts and the list of information, I couldn't draw anything better than this, right? Between MSCI rebalance, potential NASDAQ 100 inclusion, the historic options expiration Jan 2025, FASB fair value Q1 2025, which we know is coming. It's very rare that's a catalyst that you know with certainty is coming. You know, perhaps S&P 500 inclusion next year. I think the macro backdrop is phenomenal. The red wave is, of course, beneficial to the Bitcoin space. I think, you know, interest rates are going lower over the next couple of years. That also goes back to the Trump phenomena. I think global money supply is going higher. You know, we've got a pivot in politics away from the Gary Gensler and Janet Yellen's of the world to now potentially, you know, Bobby Kennedy, Howard Lutnick, you know, all these other, Cynthia Loomis, who's going to have a much louder voice now in the current administration. So
Elon, maybe you've heard of him.
Don't get him started. Don't get him started. We don't have enough time for that.
But next time. Next pod. Yeah. But you guys see what I mean, right? Like, yeah,
it's historic. I mean, this is the best setup for an equity and Bitcoin I think I could ever possibly dream up or imagine. I mean, this is, it's incredible.
And both with MicroStrategy specifically and the broader financial conditions. I think I think mergers and acquisitions next year are gonna go parabolic. I think capital markets activity is gonna go parabolic. And that's kind of my broader roaring 20s thesis. M&A activity hasn't even started yet.
Right.
I think the growth and innovation in America over the next, 5-6 years is just gonna be remarkable. Yeah.
Awesome.
Roaring 20. I mean, we're in the roaring 20s again.